Good morning, all, and I hope you had a great weekend. Welcome to the first of my videos for this week. So, the only pair that I have on watch today is Pound CAD. So, I'm going to talk you through this, and I may go into a little bit more detail than normal just because I have a maximum of 20 minutes to break down the one pair. But without further ado, let's break down this pair for you. So, we have on the higher time frame. So, if we zoom, since we've got more time, we might as well zoom right out. Okay, we have, can we see it on the monthly? We can see this exchange of liquidity here, which caused a big runoff last time around. Okay, so when liquidity was exchanged last time around, okay, it caused an enormous runoff to the downside, one of the largest that we've seen in many years. You can see here. Okay, now the clue for me, as well as the fact that we had a very aggressive sell-off, the clue for me that this was a value area that price would likely respond from is that we can see that we had a near miss to it. Okay, so let's just zoom in a touch. We had a near miss to this area, another near miss to this area, another near miss to this area, another one. Okay, so that gives me a clue that this is a value area. And I was thinking over the weekend of one of the reasons why that increases the value of the area. But if you think about when price is up in these areas, okay, and when these near misses are being formed, where are a lot of people putting their stop losses? Okay, if they're getting short, they'll likely be putting their stop loss above there. Okay, if people are getting short here, they may have it above here. Some people may have it above here. The swing trader type people, same here. Where are these people putting their stop losses? They're putting it above here. So what happens when we break above? We're likely to trigger a lot of these stop losses, okay, and then move to the downside aggressively, okay. So we have, as I said, on the higher time frames, particularly when we have an exchange of liquidity that we can just about see even on the monthly chart, it's usually the case that we will break above before moving to the downside and not just tap into the area and then move to the downside, which is more common on the lower time frames, okay. And as I've said, one of the reasons is that we have the people who are holding the buy positions here. Okay, they know that this was their, one of these highs would have been their and intended target to get out, but a lot of people hold it because they think to themselves, what if it keeps going? Okay, that's greed. According to studies that have been done within our own private community, greed is the biggest downfall of most traders, actually, and not actually FOMO or some of the other things. Okay, so they hold the position and they think, what if it keeps going? So they hold it once it breaks above, trying to squeeze more juice out the orange when this could retrace at any point. Okay, they hold it. The people that then the broker platforms put in their ticker feeds things like pound cad at, what year was that? 2022. Pound cad at 2-year high. That encourages FOMO. So once it breaks above, people start buying because they think it's going to the moon, to coin a phrase. Then you get the retesters. Okay, you can see evidence of that, elephants. You can see evidence of that here. The people that think this is a retest, so then they get long. Okay, because they believe that this is now support. Apparently, once it's retested, it doesn't quite work like that. And then you see this break above, and then a complete capitulation back to the downside. Okay, there are ways that we can get long if price breaks above, but it's not quite as simple as just a retest, which is in my experience, is a very difficult thing to judge in any case, even if there is some validity to it. Okay, and if you're constantly waiting for these retests, all you're effectively doing is buying the highs, meaning you're capping your profit potential, as you can see here. Before the move in the other direction, and the same is true on the flip side. If you constantly buy the highs and sell the lows, well, if you're a property investor and you did that, you wouldn't be particularly profitable. So we've got what I was anticipating, or what I would have been anticipating at the time, break above, and then a complete capitulation back to the downside. What I like about this now is that we have this impulse. You can see the correction even on the weekly, impulse, correction, continuation to potentially take us to the downside. Okay, we just zoom in. You can see the consolidation here. We've already had one consolidation. That was the market showing its hand. But obviously, if we're above the value area, Okay, it's more risky to be taking a trade up there because you're kind of in no man's land. You're above this value area, and we kind of tapped into that, so you're kind of floating between value areas. And one of the things I noticed from my trading documentation is that a lot of my losses in the past have, excuse me, I'm just fixing my hair. A lot of my losses in the past have happened when price has been between value areas, but we have the impulse correction continuation. So I'm just looking for a further impulse correction continuation to the downside. And the reason I've got my target there is because you can see this low even on the daily chart. It's not that I necessarily think that we would, price would stop in that area. It's more to do with the fact that even if it did keep going down to this low, we would likely get quite a lot of profit taken in this area, and we would see, something like this, and then maybe we would get a correction that goes sideways for a period of time as the people that got out of their positions here take profit. Okay, and this basically, as I said, these higher time frame liquidity points are like a train station. Okay, so a lot of people will be getting off the train in this area even if it does continue, and I don't want to sit through all of that, hold through something for that long, when it may not continue in the forecasted direction after all of that in the end anyway. But another reason I've got my target there is because if we measure where the impulse started, and we assume that the continuation leg is of a similar length, that would take us down to the area, probably down to here, which kind of makes contextual sense because this is kind of a near miss to this low, which implies that there may actually be value there as well. But just looking at the one that stands out the most and where I think the first sign of first load of profit taking would take place, that would be there. I also like the fact that we are trading back, not just back below that higher time frame liquidity point, but we're back below here now, okay, as well. So we're not retesting the back end of this. All of this consolidation is underneath here. I like the fact that I've put a array line here. Okay, I like the fact that we're trading predominantly through below that. Okay, we're slightly through it, but predominantly below it. Why is that significant? It's significant because if this correction was, so let's take the bars pattern tool for a second. So if we had that and it was sat above, then what could happen is that, I mean, it doesn't look logical for that to happen, but if I was looking for a trade within here, okay, let's just move that over a sec. Okay, so if we were trading, if this correction was above here, not that I would necessarily take that, but if I was looking for trades within here, what could happen is we move to the downside, tap liquidity that was sat just below, and then we start moving to the upside like that, okay? Whereas if we're trading below or predominantly below, okay, if prices tapped below here several times, okay, that implies that there was not enough liquidity here to send price to the upside, okay, which means that if we do tap into the area, what I've got marked as my area of value, we will likely just smash through these lows, okay, because they're not standout on the higher time frames. Okay, it's just a consolidation. It's not a standout low that you would think, oh yeah, there's a lot of buy orders there. Okay, it's just a consolidation. Okay, and I think it's likely that we'd follow through to the downside. So this is the thought process. Also, that something that's just jumped out at me that didn't actually when I was doing my forecasting. We also have left shoulder, head, right shoulder. Okay, one thing we know about head and shoulders patterns is that the right shoulder tends to be at least equal to the left shoulder, and usually it breaks above if we're going to move to the downside. So that's actually another tick in the box that I've literally just noticed. So the fact that the right shoulder is slightly higher than the left shoulder, okay, that's also a tick in the box, giving me a clue that we've washed out liquidity that was sat above the left shoulder, and that this is just a further impulse correction continuation to push lower. So what do we have here? So when I saw this, so we have this high here. Okay, we have the high here. What have we done? If we just zoom in, we've near missed to that high. What does that imply? It implies that there's value here and that the stop losses, so there would have been stop losses just above here. When we near missed to that area and we start to sell off, where do you think these people put their stop losses? Probably just above here, okay? So even though we were then down here and potentially, Okay, and potentially we could have seen an impulse correction continuation here to push lower. And the reason being, and this is a little bit more advanced now, is because we also had a series of near misses to this high here. So we have a slight near miss, near miss, near miss, come back up again. So the reason we could have responded from there and continued to push lower is because we'd actually had a scoop double top. This was potentially one piece of its own. Okay, we hit the 90% rule of that structure, meaning that that's potentially a completed structure because we have the impulse correction continuation middle section within that. Okay, we have the 1, 2, 3. We kind of hit just above the second touch, and then we wick below, wick back up. So that's potentially a completed structure. So this could have been one piece of its own where we near missed to this area, tap just above, and then we get that correction here that pushes lower. However, I'm not surprised that we've pushed up because we also had a near miss here to here, implying that there maybe still be a value here and that the people that sold here put their stop losses above there, okay, which means that price will need to gravitate likely back towards that area to take those orders out for what is the mid price. The price action we're looking at is the mid price. For the mid price to then be able to push lower, okay, it needs to potentially take out those orders. So with all of that in mind, okay, what I'm going to be looking for, let's just take that off because that's not necessary. I like to keep my charts as clean as possible. Okay, what I'm going to be looking for here is the following. You can see price gravitating back towards that high now. I'm going to be looking for a tap into the area of value, followed by a 1 hour impulse down below the area of interest, the AOI there. And then I'll be looking for either a 3-touch 5-minute continuation or a 2-touch 5-minute continuation with a 3-touch structural approach. And if we got that, I would look for a reduced risk entry on the break of the flag, okay, and then or if we got a 3-touch 15-minute continuation or a 2-touch 15-minute continuation with a 3-touch structural approach, just as I've drawn it here. Okay, then I would look for the same thing again, but I'd also, in that instance, I'd be filtering this on the 5-minute chart and looking for the entry within the flag. Okay, we don't go less than a 10 pip, so it would look more like that. Okay, so that's what I'd be looking for. And if we didn't get that, I would just let the original order, so this one, trigger me in. And then I will be able to manage this down to the low of the structure for something in the region of, I'm not really concerned about that because that just looks like an outlier, a volatility wick. I'll be able to manage it down to the lows there for something in the region of 3.79. And if we zoom out and remember our higher time frame target, oops, let's put that back on the chart and get that guy out of the way. So the ultimate target would be down there, something in the region of 17%. Whether you held that all in one go is another matter. Okay, and I would measure from the range to the range, and I would set a take profit there, which would give us the 90% area is where price often pulls back deeply. It often pulls back to the 50% mark, even if it is going to continue in the forecasted direction. So I'm not interested in giving back what would be about 5-6% profit for the for the potential of price continuing to the downside when it might not even do that. And that correction might be very large. We might be sat through it for a long period of time. So I would set the take profit there, trail my stop loss accordingly. And typically these pairs, such as pound CAD, I am the aggression, as you can see there, tends to be very aggressive. Partly, I would imagine, because price tends to consolidate longer. So I'm not actually too concerned at this moment in time that the fact that this correction is becoming quite wide relative to the move down which has preceded it, because that is a characteristic of these more corrective pairs such as pound CAD. If this was on euro dollar, for example, this would look a little bit more unusual, and I would be more open to the fact that price may break above and then this becomes some kind of M style pattern where we tap into that area and push down, or we start tapping into the highs again. But because it's pound CAD and it's a characteristic of pound CAD, just as it is pound Swiss, which I was looking at recently, and which was doing a similar thing, because it's actually a characteristic of the corrective pairs such as pound CAD, I'm not concerned at this moment in time with the fact that this is getting quite wide relative to the move down that's preceded it. And then if we did tap into that area, okay, we would then have that kind of structure here. It's the reason I haven't got it trend lines plotted on and why I'm not looking for a risk entry. One of the reasons is because you've got a bit of a subjective first touch. You know, when you've got multiple inflection points and you say to yourself, okay, well, is it that one? You know, is it that one? Which one do we draw it from? Okay, when that's the case, you always wait for the push down and the flag. That's what I do anyway, because then you take away any subjectivity. If there's any guesswork involved, just wait for the push down and the flag, and then that has showed you where price was intending to respond from, and then it's just the banks and the bigger players, this bit here, likely stacking their orders for the next wave to the downside. But we shall see. We may even get, just to touch on it, if this is the middle section I've talked previously about, if we have a corrective move up, an impulsive middle, a more impulsive middle section, and then we start to correctively move up again. What I've noticed recently is that we tend to get something like this, okay, where we end up with a 3-touch structural approach, which has the more corrective middle section in it. So when we have a correction, impulse correction, which is not the natural order of how these middle sections like this form, then we tend to get a structural approach with a more corrective middle section that has an impulse correction continuation in it. But that's just an observation that I've noticed in recent weeks and months. Okay, so that's all I'm going to be looking for today, folks. I am mindful of the fact that in Canada it's actually a bank holiday today. I do factor these things in, so we should see if this takes a little longer to shape up, and that kind of ties in with what I've just drawn. If it's a bank holiday in Canada, maybe this takes a little bit longer because this is actually the pound traded against the the pound traded against the Canadian dollar. It's easy for me to say. Anyway, folks, I hope you've enjoyed this video. I have an alert set just below this area here, and if it doesn't trigger, then I will not be FOMOing into any trades like the amateurs are doing. I will be sticking to my rules, sticking to my entry types, and that's all I ever intend to do. I hope you've enjoyed this video, folks. Have a great rest of your day, and I will see you again in the next one. Adios, amigos.